Hello and welcome to another weekly market update from 18th March to 22nd March 2024. So let's start with the world news. Bank of Japan in a surprise move raised their short-term interest rate to around 0% to 0.1%. This is the first interest rate hike since 2007, where they started keeping their interest rate in the negative zone. This was done because their inflation level has hit a peak of 2.8%, which exceeded their expectation of 2%. Another news came from the Bank of England, where they kept their key rate steady at 5.25%. The inflation has hit a 2.5 years low of 3.5% in the month of February for England. But the BOE Governor Andrew Bailey signaled that there could be a rate reduction later this year as inflationary pressure eases further. US Fed met for this week, and they kept the the interest rate unchanged to in the range of 5.25 to 5.5%. The forecast that was released after the meeting showed that officials expected the economy to grow at 2.1% this year, which is a significantly much rosy outlook than the 1.4% they projected in the month of December. The FOMC said that it expected 3 rate cuts in 2024 despite the sticky inflation, which gave a lot of cheer to the markets world over. If we look at the US Treasury, the Treasury bond yields are still trading above 4% level at close to 4.2. After the Fed news and the Bank of England news, the markets got a lot of positivity, and we saw that all the markets in the world ended in a green zone for the week. We see that US market is positive, the European market was positive, and this effect spilled to the Asian markets also. The oil still is in high dollar level at $85.56 a barrel. Gold inched up by 0.53% for the week, closing at 65,990 rupees per gram per 10 gram. For the week, the FIIs were net seller, closing at 8,365.53 crores. DIIs bought 19,351.62 crore worth of Indian equity. Buoyed by the news from the Fed, the Indian market inched up and closed in the positive zone, where the Sensex was positive by 0.26%. Nifty 50 was closed up by 0.33%. Nifty Bank was up by 0.58%. Nifty Midcap was up by 1.4%, and similarly the Nifty Smallcap was up by 1.4%. If we look at on the valuation front, the Nifty 50 trailing PE has currently reached a level of 22.8, which is above the 2 years average but below 5 years average. Nifty Midcap 150 trailing PE is at 26.5, above 2 years and 5 years average. Nifty Small Cap 100 trailing PE is at 27.7, above 2 years average and just below 5 years average. If we move to the Buffett indicator, that is the ratio of total market cap to the GDP. The ratio comes close to 95.5%, which shows that the market is at the current valuation is very fairly valued. Now we move to the candle charts. If we look at the Nifty 50 index on the daily pattern, after going down, after breaking its upward channel, the Nifty 50 is currently trading in a sideways or consolidating channel in a range of 21,900 to 22,000 channel on a daily chart pattern. But if we look at the weekly chart pattern, we get much more information that the Nifty ended on a positive note, forming a handle of hammer pattern after a red candle, which shows that there's a chance or possibility that there could be a reversal in the Nifty 50 index in the next week if we could get a confirmatory green candle. But there's a point worth noting that even after recovering in this week, the candle could not break the break the channel or the upper resistance of 22,132. If the market is if market crashes next week, then the next support level would be 21,629, which was the last low, last support level that the market took. Moving on to the Nifty Midcap 100 daily chart pattern, we see that the it's trailing in an upward trend, and after the last week, it has started moving in a higher highs and higher lows. On the daily chart pattern, which shows a sign of reversal in the mid cap index. If we look at on the weekly index, we again see that after a big red candle, we seeing the hammer being formed for the last week. If so, the next week becomes very important. If we see another green candle coming up for the next week, then there's a chances of reversal that we could see into the mid cap segment. So, but if market fails, if market is not able to support this level, then we could see another support level at the 43,257. This would be the next support level for the mid cap. Similar to the mid cap index, small cap index is also forming, is trading in the channel, and it's forming higher highs and higher lows, showing a sign of reversal in the daily pattern. But if we move to the weekly pattern, there's a definite hammer which is showing, which is coming after a red candle, which shows that next week could be an important indicator to see if we get a green candle for a confirmation. But if market is not able to sustain these levels, then the next fall could be next support level could be 14,000, and if it goes beyond that, then the next level could be 13,000 for the market. If we now we move to the Indian bonds, the Indian 10-year government bond is currently trading at 7.087% yield. If we look at the yield curve, the short-term maturities is the yield is inverted, whereas the mid-term and the long-term maturities are flat as of now. So that was all from my side. Do share, like, and subscribe to our channel to get more updates every week from us. Thank you.